review of the results of the release of the Australian employment change and the unemployment rate on Wednesday, February 6th, 7:30 p.m. Eastern Standard Time. We have the calendar in front of us right now, and we are looking at the employment change numbers, which in all cases here are positive. We have an employment change 10.4 thousand increase, and the unemployment rate has dropped 0.1% in Australia. It has gone from 5.5 to 5.4, which according to the information we would all believe that that is a great number for Australia, and that the Australian dollar should increase in value. Let's take a look at the charts and move forward on this. So here we're looking at the chart of the Australian US dollar, the 1-minute chart, just prior to the release of the Australian employment numbers. The trade plan, as it laid out, requests us to draw a support and resistance line going back to previous 2 hours and drawing the lines at the previous high and the previous low. And the trade plan then tells us we're going to look for a breakout on either of these particular support or resistance lines. So let's move this forward. There's the release. The first 1-minute candle has broken and closed above, so the trade plan indicates to us that we should follow that continuation. We had great numbers from the Australian employment release, and we would anticipate that that would continue upward for us. And let's go ahead and watch this. So we would have entered in the 1.32927282930 area. A 30 pip stop would have been at the 300 range. Down in this area would be a 30 pip stop. If you had a 20 pip stop, not sure you'd be at around 1310. Let's roll this forward and see where we end up. And in quick order, very quick order, we are stopped out of this trade. The Australian dollar actually moved in the opposite direction of which we would have anticipated. And we can complain as much as we want and say the unemployment numbers were such and we were right in our assessment and we should have bought, but as we know in this forex trading world, the only thing that is right is the market. So if you were in this trade and you got stopped out, that's part of trading, and it continued to fluctuate in this area. It did finally, many hours later, come back up, and if you were not really into protecting your losses or minimizing your losses, it did come back up for you, and you would have eventually got back to break even or possibly a slight gain. That is not the way that Huskins teaches to trade. It's not the way I trade. It is a loss when it is a loss. When it hits that stop that is a hard stop that is set to protect your capital, you get out of the trade. If I had set my stop at 30 and I got out of 30, that's great. If it had dropped on 50, 60, 70, 80 pips and I had not placed my stop at 30, it would have been a very large loser had it continued to drop down. In this case it didn't. It did come back up, but it's still fluctuating in an area as we move actually to the point of today where we're at. It will now all of a sudden become very different because of the information coming out of Europe with the European Summit, ECB, Draghi speaking, and a number of other releases happening at the same time. So it's very volatile right now between 6:45 in the morning and the current point where we're at. The US dollar is very volatile as well as the euro.